Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is Ted Oakley. He is the founder and partner of Oxbow Advisors, and he is the author of the book Your Money Mentality. Welcome back, Ted.
Thanks, I'm glad to see you.
Yeah, it's a huge pleasure having you back. Ted, everyone has been hearing about the crisis calls from the White House all the way to Janet Yellen saying there's an economic catastrophe coming due to the debt ceiling dilemma. Now that the debt ceiling deal is made, how bad is that deal and how will it affect the economy?
Well, I don't know how much it would affect the economy from here. If you just look at the particulars of it, obviously the only thing they can raise is defense spending by about 3%. But I think worse than that, I think, is the rest of the economy, not the governmental part of it, but the civic part of it is not doing as well. So we'll just have to see how it plays out. But it's a little bit at a time this economy breaks down. And so I think that'll all fit together.
Absolutely. And with all the uncertainties in the banking system now, Ted, the Federal Reserve have basically trapped themselves. And it seems it's like a trap of their own making. How bad is Jerome Powell's dilemma right now, and how will it affect precious metals?
Well, I think what's happening now is if you get a little backup in the bond prices, you'll notice it usually affects gold negatively. And we like gold and gold miners, so it's not that we don't, but they tend to go together sometimes. When the bonds are doing well, the gold will do well too. And the bonds backed off a little bit when people got afraid of the debt thing. We thought it was sort of a joke, but they did, and then affected gold. But gold really isn't in a good spot right now. So I think it'll be okay. But Powell, I don't think he's in a spot where he can lower the rates here. I mean, maybe he goes on hold, but he's still an 8.25% prime, which means if you're a bank borrower at prime plus one, you're paying 9.25. So it's expensive.
Yeah, absolutely. And I have to ask you, Ted, we are Wall Street Silver, so we need to know your thoughts on silver. What do you think is driving the price of silver right now? Are we going higher or lower?
I would suspect it's going higher. Now, I have to tell you, we don't own silver outright like we do gold, but it's
Right.
typically they all follow together.
Hmm.
And so sometimes one runs percentage wise more than the other one. And all, it looks as though to me that if you look at countries that are starting to perk up, like Japan or something like that, now those other countries falling apart as well. But I would say, you're going to have, starts and switchbacks and that sort of thing. But in general, I would think silver would be following gold.
Hmm. And gold was hitting it was hitting new all-time highs recently, and then it got pulled back a bit not too long ago. Where do you think gold is heading for from now till the end of 2023? So another 6 months.
Well, hard to say. I'd put it this way, Ivan, I would be surprised that it went any lower or a
Right.
lot lower. And I would guess that it would go back and either make a new high or certainly test the old high that was just, it was only quite a couple months ago and at the most. So I suppose it will come back into its own in here. One of the reasons I think that is because I think the interest rates peak out in here somewhere. And even though they may not start down immediately, if they see that in the gold price, then you'll see gold keep on moving again.
And like, do you have I know you don't have a crystal ball to tell us, but for gold prices, but do you think it's possible we can hit 2200, 2300 by the end of the year or no?
Oh yeah, you could. Yeah, I mean,
Yeah.
the thing about gold is that it's not very highly owned. As a matter of
Right.
fact, most of the buying's been in big centralized governments overseas and jewelry to a certain extent too. But yeah, if you have all of a sudden have people get interested in gold and just create a few more buyers is all you need because basically it's been unloved to a certain degree. So if you get some buyers, yeah, you can push it up to a new high like that.
Absolutely. And Ted, where are you putting your money right now? Or where's Oxbow putting its money? With all the uncertainty in the markets, is it just strictly gold or where are you putting your money?
No, I mean, we have three strategies. We have a really conservative, very, very conservative strategy that basically owns treasuries and really high grade municipals, that kind of thing, but all typically less than 48 months or so. And and that's done fine. It did well last year too, by the way. We didn't get hit like most people did in the bond market.
Right.
And so we have that strategy. It's oddly enough, it's about 65% in treasuries short term right now. Then we have a stock strategy on the far end, and we're only about 45, maybe 45% invested at the most. The balance of that is in US treasuries. And then in the middle, we have a strategy called a high income strategy, which is a strategy that is designed to pay a lot of cash flow. We don't own bonds in there, but we own a lot of other things that pay anywhere between 5 and 10%. And we're about 65% treasuries in there too. So you'll see we're really, really defensive, but we still had a pretty good year overall, but we're still defensive. Yeah.
And you said earlier you guys like the gold miners. What do you look at, Ted, personally, before you put your money into one of these gold companies? Do you go like producer, explorer? What is your preference?
Yeah. Well, first of all, we really like the royalty companies.
Right. Yeah.
Now you look at our top holding there really is Franco-Nevada. So we want to get around the CapEx part of it. Because as you know, I mean, it's a lot of expense when you're trying to build up, mining assets. And so we look at that. Now for us, and a lot of people do it different ways, but we like to own the big ones because we want liquidity when we want to move around. And usually it's on the buy side. But if you look at our top holdings, I mean, it's going to be Franco-Nevada, Agnico Eagle, as we really like that as well. It's something that we like. We own the bullion. We own Newmont as a dividend payer. I think people forget about, but if you start to look at a lot of these companies now, these mining companies, and we look at price to cash flow in these companies, and their price to cash flow multiples are as low as you'll ever see. And so if they just expanded into a normal period of price to cash flow, you would get pretty big moves in most of the miners. Now, I know a lot of people are going to buy the juniors and the smaller company, all that sort of thing, but we're not that good. I have to say, we stay with the big ones.
Yeah, that's super fair. And Ted, everyone is saying that in precious metals, the price will skyrocket the second the Federal Reserve either pauses their interest rates or starts reversing. Are you in that same camp or no?
Well, I never say skyrocket because I'm not good enough to do that. But I would say, I think people over time will start to watch and see, because if they thought, for example, that the Federal Reserve was going to back off real quickly and come back to like the zero bound on the interest rates or something, I think that would put a move in the metals. No question about it. I mean, you'd see a commodity rise again, including gold. I don't know if they're going to go that direction though, because they spent so much time trying to make sure they got back to where they wanted to go on inflation.
Right.
And they're just not there. If they do it now, it'll be, well, I've seen them do so many things that they said they wouldn't do so over the years. So they could do it, but it would sure give them a black eye. I'd have to say that.
Yeah, I totally agree. And Ted, a lot of people are talking about the BRICS nations like Brazil, Russia, India, China, and others. They're looking to move away from the US dollar. Can they actually end the dollar's dominance, or is this all too far-fetched?
Well, it's a big topic, cross-border finance, and I think they want to, for sure, but it's harder to do, I think, in day-to-day pragmatic terms than people might think. You can't, and there's probably, I don't know, I've counted 10 or 11 countries that are in that loop, Turkey, even Saudi Arabia, Russia, China, India, a couple of countries in South America. But when you put it all together, they have to come to an agreement. First of all, if they're going to use some sort of consortium to create, a prorated currency, so to speak, and, they haven't gotten there. So not that they don't want to. I certainly think they want to do that, but that could be years in the making unless they really put something on quickly. But so far they haven't.
And a lot of people are, well, even the Federal Reserve members are saying that eventually they will get back to that 2% inflation target. But with all the debt ceiling being raised and with more money printing coming, are we ever going to get back to that 2% inflation target, or is that just a joke now?
Well, I certainly have my doubts, okay, because, the 2% and less than 2% was at a time when we kept rates at 1/4 of a point, for, I don't know, 8 years, whatever the number was, which was an experiment that really was horrible. So I don't see that. I could actually see them moving the target maybe to 3 or 3.5 or something like that. Maybe it may be higher, but they may have to move the target. I mean, if you look at long term, I'm talking about a couple 100 years, you can usually use 3% as a pretty good benchmark.
Mm-hmm.
That's what we use a lot of times, and it's proven out over time, over the long haul. But I mean, it has ups and downs. But I'd have a hard time seeing, unless we go into a severe recession, Ivan, I wouldn't see us getting right back to 2. No.
Absolutely. And moving on to a little bit of a topic of centralized money and central bank digital currencies, the Bank of International Settlements, Ted, they announced that their own kind of central bank digital currency coming out, and the program's called Icebreaker. And more countries are transitioning to centralized money. So my question for you, Ted, is how dangerous is it to have a central bank digital currency, and will people even accept it?
Well, I think it would be really hard in the U.S. now,
Right.
and I'm assuming in some of the other countries where they don't have a good system anyway, that it might work better for them. Could, because you think about countries where they really don't have good people running the currency markets for them, or running their central banks.
Mm-hmm.
But in the U.S., if you think about it, I think there would be a huge backlash, big, because you stop and think about it, if every time I tip somebody or I give a $20 bill to my grandson or something like that,
Right.
it's run through digital. See, that puts them in another control mode. I'm talking about the government. That's a real big notch of control. And I don't think people are ready for that control and command economy by using a digital currency.
Yeah, I'm on the same page as you. Are you a gold stacker, a physical gold stacker? How important is it to have real physical gold, Ted?
Well, I personally have it too, but we
Nice.
run about 3.5% to 4% physical
Okay,
in
awesome.
all our portfolio. And then the stock portfolio is all stock. So we don't have it there, but we have a couple of miners. So,
Right.
we try to participate on that side, but stock portfolio is different. But the other two, yeah, we own the bullion. We think you ought to own some.
Yeah, no, you have to own some physical, especially in this in the crazy economy.
Yeah.
Well, Ted, it's been such a huge pleasure having you come down to Wall Street Silver, and hopefully, as the market develops, we can have you back on.
Okay, Ivan, thanks.
Awesome. Talk to you soon, Ted.
Mhm.